Qantas's chief, Alan Joyce, is forging ahead with plans to become one of the Asian region's major players for budget travellers. Budget carrier Jetstar will form a joint venture with China Eastern Airlines to tap the Chinese market. It also marks the first move by a big Chinese mainland carrier into the growing no-frills sector. Philip Lasker has the story.
You're looking at what the Qantas Group sees as untapped massive potential.
The booming middle class in China, we're seeing 300 million people already come into the middle class, and that's estimated to more than double over the rest of this decade. So the market potential is huge.
It's a demographic the analysts say is underserviced by budget carriers.
The opportunity for Jetstar is very much to take advantage of that growth in the region.
So Jetstar is forming a joint venture with the Shanghai-based premium airline China Eastern to create Jetstar Hong Kong. It'll start with 3 A320s for short-haul flights from next year, growing to a fleet of 18 planes 2 years later after a joint investment of nearly $200 million.
It's an alliance that's going to give exposure to the Jetstar business into Hong Kong and China.
And it follows a well-worn path of Jetstar joint ventures in Singapore, Japan and New Zealand.
We believe that we can set up a low-cost carrier here in Hong Kong at 50% lower cost than the incumbents. That allows us to offer extremely low airfares, which allows us to stimulate the market and allows us to grow.
China Eastern says it expects the joint venture to be profitable in its third year, and Qantas hasn't ruled out establishing a premium carrier in Asia, despite this month's collapse of plans to set up a premium brand in a tie-up with Malaysian Airlines.
There is market speculation that Qantas will again look towards Singapore as potentially a hub for a premium carrier for the mainline Qantas business.
To transport workers locked in a battle with Qantas over pay and conditions before Fair Work Australia, today's announcement underlines the push to dismantle the premium brand and its workforce.
Qantas is cutting its routes, sending them on to cheaper, outsourced overseas jobs and taking the life and the money out of Qantas to set these arrangements up under the Jetstar banner.
But it went down well with investors who pushed the Qantas share price 2% higher in a falling market.